Hello guys, welcome back to another Linktree trading video. In this one we're going to be doing some in-depth stock analysis on C Limited, ticker SE. Reason for the analysis on it, as you can see, it is down around 6.5% today. It is or has just hit a 52-week low, but it is is at a relatively low risk long area, and it's something we would look to be a bit more bullish on going forward. So as always, we start off on a clean daily chart so we can see is there any gaps that need to be filled, because we can use these as price targets. And the reason for that is gap fills, or especially obvious gap fills, tend to lead to a large bounce, especially if it's a very noticeable gap, such as this $23 and roughly, or just $23, near enough dead on gap fill there. And then really that is kind of the key one we're looking at. Not taking too much notice of anything else. This one has already been filled. So yeah, apart from that, really the only one we're looking at on the gap fill side of things is $223. Yes, there may be some smaller gaps, but we only like the very obvious ones that, even if you're not looking for gap fills, stand out to you. And for example, this 223 is quite obvious. Now we will go over to the standard deviation chart so we can start seeing where are our low risk buy areas, and you'll be able to see we've already broken past a kind of 215 and 223 level, which is where the second deviation was, and was kind of in the Discord where we started talking about getting long bias on it. But as it has continued to fall, we can now recommend that next buy area, and as of now it's $172, and then on the daily $178 and around 50 cents. So right now this is our low risk long area. Obviously where we are now is still low risk because we are still below second deviation, so if you're looking more for an investment time frame, then that extra $1 or $2 or even $10 down is not going to be the biggest difference. So you could look to kind of buy now, but if you're looking for the kind of strong bounce level, we would expect it to come down to kind of that 78.50, 178.50, all the way down to kind of 172. Now where are our price targets on this? Now our very first and kind of where we'd most likely just look to move move our stop would be 215. So this is where again we most likely may not even lock in any profits. If we did, it would most likely only be a small amount unless you're looking for very short term swings, but we can see that the upside potential at a minimum is 20% just for that move alone. But in all reality, we would be looking for further moves. We would be looking in most likely some profits at 223. Why is this? This is the gap fill level and also the second deviation on the daily, so we would expect a pullback coming into this level, and that alone at a very minimum provides 25% upside. Now we would expect it to continue going up, and we would be holding the majority in anticipation of it going up, and the key levels then would be the 259 and the 269. Again, we would expect it to continue, but this alone again provides a minimum of 46% and 51%. Now where is our final target? 303. Reason for that is that statistical mean, and the closest statistical mean we have 303 on the 4 hour and a statistical mean of 314 on the daily. When we're looking for final targets, it's whichever statistical mean comes first, and in this case that is 303. We wouldn't look as a swing trade to hold past here. If you're looking for an investment, then that's fine, you can look to hold past, but for swing trades we really don't want to hold past statistical mean because it becomes a lot more of a gamble on where the stock's going to go next. The reason for that is stocks try to reverse to that mean, so once you are there it can either go up or down, and it's usually not so much a technical basis from there, it will be more of a fundamental thing, so again something more out of our control. But at a very minimum, going from the 178 level all the way to 303 provides a 70% upside. So looking at C Limited, our kind of main target going from our buy entry to our key target would be at least 70% upside. So from this we can see that C Limited does provide a good trading opportunity, and what also does stand out is when looking at the daily we are having a divergence, which is a good thing to see because it just gives more probability and even more strength to the long biased nature of C Limited. So I hope you enjoyed the video, hope to see you in the next one, and that's it, peace.